we're going to be taking a look at some major changes that Warren Buffett has made to his portfolio. And this headline right here is what many may be thinking. What's behind Buffett's surprising portfolio shakeup? Is there a strategy shift? So he's out of SPY and VOO, both which track the S&P 500. He's doubling down on some unexpected stocks. So he has us wondering what is going on with the Oracle of Omaha. Is there something that we're missing? So today I'm going to take a closer look. I talked about this a little bit in my live stream yesterday, but we're going to dig a little deeper into the changes that have been announced in the portfolio. But before we get started and we get into first those S&P 500 investments, I'm going to share this clip because this is what I've known and quoted him as saying when it comes to those investments.
I think it's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund, keep buying it through thick and thin, and especially through thin. The temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do fine over time. So you know the investment universe is going to do very well. The Dow Jones Industrial Average went from 66 to 11,497 in 1 century. And then since that century has ended, it's more or less doubled again. The trick is not to pick the right company. It's to be, because most people aren't equipped to do that, and plenty of times I make mistakes on that. The trick is to essentially buy all the big companies through the S&P 500, and to do it consistently, and to do it in a very, very low-cost way, because costs really matter in investments. If returns are going to be 7 or 8%, and you are paying 1% for fees, that makes an enormous difference in how much money you have on retirement.
So we're going to be talking about what he's reduced, what he's added, and what he has sold completely out of. So at the bottom here, we see SPY and VOO as well as Ulta are completely eliminated from the portfolio. So SPY and VOO both track the S&P 500. Looking at VOO as an example, this investment is up about 23% over the last 2 years, but it is a fund. And as we take a closer look, we can see that in Buffett's portfolio, he prefers individual stocks with those strong long-term fundamentals as opposed to these type of funds. He also sees more value in individual businesses rather than ETFs that are heavily weighted towards those tech stocks, which are already, many of them, at sky-high valuations. In addition, Buffett is also known for these type of strategic shifts. When he sells, it's usually to free up capital for better opportunities. And in addition, what I'm saying about him preferring those individual stocks, when it comes to SPY and VOO, even though it is 44 billion, this was already a smaller percentage of his portfolio in comparison to individual stocks like Apple, for example, where he has about 70's worth of exposure in that one company. So I invest into individual stocks, but I also invest into ETFs, funds that track the S&P 500, like FXAIX and VOO, as well as VTI that tracks the entire US stock market. I try to find a balance between the two, but for now, he's eliminating that type of exposure out of his portfolio. But I think it's still the right balance for me, having a good portion, a large portion of my investments into funds like this that are managed, that are balanced, that are low cost, pay a steady dividend, and always recover in time, even in times when we have a severe downturn. Now, let's take a look at those positions that he's added or increased to his portfolio. So Warren Buffett has bought shares in booze, pizza, pool companies, and more. So first, let's take a look at Constellation Brands, ticker symbol STZ. This is a $1 billion bet on alcohol. Warren Buffett's Berkshire Hathaway just bought 5.6 million shares of this company, which is worth about $24 billion. This is a company behind Corona and Sveta Vodka, just to name a few of those big brands with strong customer loyalty. So, alcohol stocks tend to perform well in both good and bad economies, making this investment a defensive play. Constellation is also expanding into cannabis investments, partnering with a company called Canopy Growth for that long-term growth potential. Buffett loves businesses with strong cash flow, and this company, ticker symbol STZ, has been boosting dividends and buying back shares. They've been having steady revenue, and they've proven themselves as a recession-proof winner when it comes to the stock market. So, over the last year, they are down 33.56%. But as I said, this is one that Berkshire Hathaway is betting big on. Now, let's take a look at some of those increased holdings when it comes to the portfolio. Okay, Occidental Petroleum, ticker symbol OXY. Buffett added to his massive stake, which he already had in his portfolio, signaling his continuing confidence in the energy sector. With oil demand still being strong, it looks like he's expecting to benefit from rising prices. Berkshire Hathaway owns over 28% of Occidental, which has some speculating that he might buy out the entire company. This is a company with strong cash flow, which is what Buffett is aiming for, businesses that generate high returns with low debt. This could be a bet on capitalizing on long-term inflation and higher energy prices. Another company that they boosted their stake in, reflecting their confidence, is this fast food company, Domino's Pizza. They seem to be banking on the resilience of fast food and delivery. Domino's has a strong franchise model and dominates when it comes to online pizza ordering. Their aggressive global expansion and tech-driven ordering system set them apart from their competitors. Even during downturns, people still find a way to order affordable meals like pizza, and it has been a steady performer. Over the year, it's up 14.27%. This company also has been buying back shares and increasing its dividend, rewarding those long-term investors. And with Buffett's love for simple cash-generating businesses, Domino's fits into his long-term strategy. Next up, let's take a look at VRSN, and this is also an increased holding in the portfolio. And this is a company that manages domain names. Every website needs a domain, making VRSN a high-margin, recession-proof business. They operate under a government-backed contract, meaning they face little competition. VRSN has low costs, but consistent revenue, a Buffett favorite. As the internet expands, demand for domain name is growing, making it a long-term winner. So Buffett is betting that VRSN will keep printing money for decades to come. Now on to media company SIRI. Also increased holding, Buffett's media play when it comes to these investments. This is the satellite radio giant. Unlike traditional radio, SIRI has subscription-based revenue, keeping the cash flow steady. The company benefits from its exclusive content, including deals with many celebrities and sports leagues. So, despite competition from streaming, SIRI maintains a strong position when it comes to those subscriptions that we use in our cars. With a loyal customer base, they've been focused on recurring revenue. Buffett sees it as a place where he will get that steady cash flow. The stock has been trading at a reasonable valuation. So it looks like Buffett is trying to swoop in and get this at a bargain. Looking back to the headline that I shared, Pool Company. So ticker symbol POOL was also increased, and they are a leading distributor of swimming pool supplies. So looks like this is related to a positive outlook on the leisure industry. So taking a look at this detail here, it shows you the share sizes and the percentage of the overall portfolio. So now let's talk a little bit about those positions that he reduced in the portfolio. So we can definitely see there's been a reduction when it comes to financials like Bank of America, Citigroup, Capital One, as well as New Holdings. He's stepping back from telecommunications by reducing T-Mobile. He's exited completely out of the beauty sector, selling all of his Ulta Beauty. And we've already touched on some reasons why he could be moving money from those funds over to individual stocks by eliminating both SPY and VOO. So I just want to give a more detailed breakdown as to these adjustments that Warren Buffett has made in his portfolio so that you could do your research and determine if there's anything worthwhile in here that you may want to add to your portfolio. Long-term investors may want to consider some of these investments because Buffett's picks are usually focused on stable cash generating businesses. So you can evaluate whether you want to get on board with energy plays like OXY, those defensive stocks that perform well even in a downturn like Constellation or Domino's, or those unique plays that we looked at like VRSN and SIRI. As always, do your research. Let me know in the comments, will you be considering adding any of these to your portfolio, or do you have them already? If so, how are they performing? Have you been keeping an eye on the news like I have and taking a look at investments that Warren Buffett or Nancy P or NVIDIA are adding or removing from their portfolios? Make sure to leave me a comment if you got this far. Subscribe, like, hit that notification bell. Check out my live stream from yesterday where I dove deeper into some other investments that some big names have made adjustments to in their portfolio. Thanks for watching. Okay, bye.